is the day filing 2023 tax return, the due date, the very, very due date, right? 1040 extension from April 15 to October 15, it is today. So after today, all your tax accountant gonna go on vacation, okay? Don't try to call them tomorrow morning because they will be making you raining forever. But our firm is different. We open 6 days a week. Tomorrow morning, you can expect us still here and still working just as normal, so you can call us if you have questions. But today, I want to talk about the very last minute rescues from huge tax liability. So, I am not going to go too far. Today, I'm just going to talk about what I did today since 8 o'clock this morning. So right now it's 3 p.m. our time. So I had in between of these hours, I give you some examples that I just come through and I just helping client or not even client because they didn't do tax with us, but they didn't like the tax liability. They want me to review their taxes. So that is what I did today. So let's go ahead and just talk about that. And you see our YouTube channel, didn't you? That is Community CPA on YouTube. Subscribe to our channel because when you subscribe, you get notification. Every time when we are online talking about something, you see the title. If it is interest to you and you hop in. If it is not, you pass by. But all of these topics are inside of YouTube channel. You can search, you can find us after the fact. So please know that to subscribe to our YouTube channel. And I also want to quickly show you our website. This is our website, communitycpa.com. And you can onboard with us without calling us. You can click that onboard with us button and set up your own login, start uploading your document. And our firm is a firm that everything is here in the United States of America. We have not ever sent any of our work done somewhere else. So we are just a little bit timid about seeing the data going anywhere else. So we're very secure with our data. We're very tight. And if you're our client, trust us. We protect your data more than you protect your own data. We're a little bit noxious in that regard, but you can be comfortable to upload. You're with a very secure firm. And what you see on here, let me start sharing my screen with the little bit of a PowerPoint I prepared. And about our firm, I kind of talked to you about our firm, our newest branch in Houston, Texas. So I welcome you to spread the word for us and let other people know that we're in Houston, Texas, and we like to see business people coming to us seeking for better solutions of what they have right now. And I also want to tell you that we have books on internet, right? So today I happened to go onto internet to look at Amazon, see how the book selling is going with appointment with Ying at 8 a.m. and 10 a.m. It's going pretty good, but one thing I want to mention to you, when you buy books on Amazon and every penny you paid to this book is donated to a nonprofit organization called Immigrant Entrepreneur Summit. This whole receipt of the book is a way that for me to contribute to a nonprofit cause, which is to encourage immigrants, new immigrants, old immigrants, generation immigrants to start business and start smartly, and grow business, grow smartly. And I am writing the 2 p.m. to expand the business and expand smartly, right? So that's how we are doing business here. And no responsibility disclaimer with all the content we talk about. Things can go outdated. I may have a brain glitch and just suddenly forgot how to speak English. So all of these things, and you will forgive me. And don't hold me responsible, and do your own research on that. Okay, folks? All right, let's talk about the last minute rescue story of today. Yes, these four are what I just did for the last 5 hours. So John came in, and he did his taxes with somebody else. And he said to me that, Ying, I am going to do tax with you in 2024, but 2023 is already done. I don't like the result. I have too much tax to pay. I need to pay like 40-some thousand dollars. It shocked me. I am so shocked. I cannot submit my taxes. But today is due day. Can you help me? So in conversation, I realized that John has already have a SEP IRA account. So I asked him, did you contribute your SEP IRA? He goes, no, I had this account for a couple of years. I didn't do anything, so I wasn't even sure I can still do it. But today is already 15th. So he called his financial planner. The account is still active. We're going to put in $69,000 in that SEP IRA account. Guess how much taxes we're going to save? Immediately today, in 1 hour conversation, we saved $17,940 of federal tax, and we saved $4,140 of Minnesota state tax. All right. So what did I say to you about this story? This story tells you that when you make too much money, you can work on putting money away to your retirement fund. And right now, if you didn't have a SEP IRA account already set up, it will be too late. We can't just set up the account right now and contribute for 2023. But he already have SEP IRA account in place. So we're going to put in $69,000, which is 25% out of the self-employment income. 25%. That's the maximum. So we put in the 25% of the self-employment income. That equals to $69,000. We put in that amount into the SEP IRA, the account he already have, and the financial planner will make us classification. That amount is for 2023, not 2024. So on the tax return for 2023, on Schedule C, and we can put in the $69,000 under, I want to say is line 17 of Schedule C. And if I am, just look at that. I could be wrong, but it is in that body of Part 2 of Schedule C. So with that, he will immediately save that amount. All right. All right. And I didn't even talk about self-employment tax that he is going to save on here. Because once that put away, and the profit will lower, so it will save another 15% on top of the $17,940. What do you think? It's a pretty good story of today, right? Betty can file 1040 without her Schedule C. And Betty coming in has a Schedule C. And it is just a lot of income. And she also said that, oh, Ying, on the tax return, it's like it's under my name. Actually, it's me and my husband. We both are doing the business. Just my husband doesn't really, work there. It's just me work there. But the ownership is really both of us. So if that's the case, ladies and gentlemen, you should file 1065 partnership and save part of you. If the husband takes 50% of ownership, and then the 50% of the revenue doesn't need to pay self-employment tax, because Betty is the only one working in that 1065 partnership environment. That is an immediate save. So you may say that, oh, Ying, that's too late, because today is a due date for 1040. 1065 was due on September 15th. So late already. That's okay. You are late, then you are late. And you're going to be penalized. And you're going to go back to IRS, ask for the first-time abatement for late filing penalty. No big deal. It is the first time because you always filed in Schedule C. This time, you are filing them on 1065. All right? See, there you go. And with this particular case, we saved about $30,000 on taxes. Just one change. So, of course, Betty has to file 1065 first, then do 1040. So she's gonna be late. I don't think she can get that done today because all of the things are happening. But she will reduce her taxes significantly. All right, that's another good story, right, folks? I hope you follow me. You understand what I'm saying by last minute rescue. And if you are the procrastinator and like to do firecracks during the last minute, and nobody can stop you, right? So you just need to find people who can entertain with you and do this last minute. I wouldn't say I enjoy you to come to me last minute, but if you really come to me for last minute, I treat you seriously. I understand, circumstance making you come the last minute. I would not fault you for that. All right. And just a couple of hours before I come to the webinar, and I was reviewing one of our 1040 client. Obviously, October 15 is a lot of 1040, right? So I was reviewing our 1040 client, and I realized that the income was a little bit too high. And I also know that this client sold the business sometimes at the end of 2023. So, I simply made a call to the client. I didn't make the call. My tax folks did. Actually, Bonnie made the call. And to ask clients, did you happen to combine your capital gain income into the total income you give us as your business income? Are these one number, the other number should be total together, or you actually give us a total, then give us the capital gain number? So client goes, oh, I'm so glad you asked. I did include the gain selling for the business into the regular income. Yeah, I didn't make that much money. Actually, a lot of that is from the selling business. There you go. And you have a regular income subject to self-employment tax versus capital gain income, which does not subject to self-employment tax and also is a long term, so it's subject to lower tax rate. All right, folks. So this is where, it is good to pay taxes to IRS. That just says that you're successful. To be successful like President Trump and pay zero taxes, I don't know how to understand that. That's not normal. The normal situation is you're doing great and you're paying more taxes. So I am not opposed anyone to pay taxes. You pay taxes, I congratulate you because you really made it. But you don't want to pay tips. But in this third example I gave you, my client would end up paying tips to IRS because they accidentally including their long-term capital gain into a regular income. And so we, as a tax preparer, and that's our duty to recognize that, imagining what client was doing, recognize the sales is not right, and they sold the business at the end of the year. How could they have more, income than what they have last year for 12 months, right? So those are good questions, good thoughts we have in our mind. So we call the client and figure it out. Isn't that amazing? I am so proud of with my staff because they knew what would be looked at, right? All right. The fourth one is what I come through just right before our webinar. Self-employed individual paid medical insurance, did not deduct that expense above the line, but put in the Schedule A. If you have a Schedule C business, you also buy yourself medical insurance. And your medical insurance premium deduction is above the line, which means it is before you calculate taxable income. You do not put that in Schedule A. That's not the right place to do. And you may say that, Ying, what's the difference it does? Of course it's different. In Schedule A, you have a standard Schedule A amount, so you may not even need your medical insurance to go in. You can't raise it anyway. And even if you add it up, it won't be more than standard. So that's a waste to be in the Schedule A. But if you didn't deduct above the line, above the taxable income line, then you wasted your deduction. You're supposed to not pay taxes on that piece of medical premium. So we catch people missing small things like that. So these are last minute rescue I just did today. I'm not talking about a month ago, a week ago, a day ago, just today, October 15th. So I really want you to learn from here and knowing that this is the day that last minute help can still happening, but at the same time, don't come here on the regular basis. right? So I want to talk to you about getting more organized. Don't give Ying heart attack at the last minute. So just try to plan your taxes like how you have a baby and takes 9 months to plan. So why can't you just do that like having babies every year and give yourself 9 months to plan that, right? So here, the goal of year-end tax planning. Now it is year-end for 2024, right? Right? 2024. Time goes so fast, isn't it? And when I was younger, I have a boss, and his name is William Baker. And he actually taught me a lot of philosophical ideas and in terms of thinking. And I remember I budged over to him and I said to him that I need a raise because I did such a good job for him, and I know he would give me a raise. So I went to him. And he said that, yes, absolutely, and give me 3 months' time and to get you the raise. I was screaming, no, how could you take 3 months? You just give me a raise. That's one time. That's 1 minute. It's 3 minutes. 3 days. 3 weeks. How could that be 3 months? And then he said, Ying, the older you get, the faster time goes. My 3 months is the same as your 3 days. Because you are younger. You are 3 times younger than me. And I'm telling you, that is how I feel. So I'm not stressed at all by your push. I'm going with my timeline. 3 months. Man, that was like not happy, but yet happy, because I suddenly learned something. I learned when you're older and the time relevancy changes. So if you are in your 50s, your relevancy is different than 5 years old, right? So with that, the year-end planning, I want to say this to you on the year-end planning is that the more you plan and your age is also growing, the more mature your business, the more timely you want to do it. You don't have to wait until the last minute because time goes so fast. You do it right now. Right now is October to December. It is our year-end tax planning season. You want to clean up your accounting for third quarter, and you want to calculate your predicted taxable income. You want to list all the possible transactions that may be happening before the end of 2024, and you want to make estimated tax and pay it before December 31st, 2024. And you want to let your anxiety free. You want to let them go, and you go into 2025 knows on the financial end, you are super organized. And just know that a lot of successful business people are not young. And which is true. In the olden days, it's even more true. But nowadays, it's still true for folks in their 40s, 50s, are the majority successful business owners I see. So out of this group, time starts to fly. And you don't want to wait. And you know that it happens overnight. So you want to put in your goal right now, today, after what Ying is talking about today, and put in your year-end planning. If you don't want to engage us for a professional service of year-end planning, do it yourself, right? Look at this. So I actually have a chart here, and if you have watching our other planning meeting webinar, you kind of remember this chart. This is our standard chart. It doesn't matter how complicated your life is, we chart your tax life in one page, 8 by 11. So a lot of our tax people, a lot of our clients, even they have 20 businesses going on, but they get one chart from us. That is that. You only see it because it has only 3 businesses. But, when people have 28 businesses on one side, 30 on the other side, and then you have one page. The reason we give you one page, that is how we can mentally, emotionally managing our physical affairs properly. If I tell you that, oh my God, you're so vastly not controlled everywhere. One moment you think of this entity, the other moment you think of the other one, and you don't even know how they connected with each other. No, don't do that. You want to come to this one-page understanding, and our tax planning is really not about printing out a book for you and to show you how much worth on paper we are, and we actually give you the tool of thinking simply and thinking straightforwardly so you can know exactly what you need to do. That's what we do. And I give you a couple of good planning tips for 2024, okay? To go into your 2024 planning. Remember to look at your tax return to look for passive losses, okay? If you have passive losses, you make a note. You need to eat it up in 2024. So you may say, well, Ying, I don't know how to eat it up, and I teach you how. And not just soy sauce and the salt, and I will add other peppers and other ingredients in there for you, so you can eat it deliciously, and then ended up not paying any taxes, okay? And the passive income of 500,000 for a couple, and this is the similar example I give you, you can save half of the self-employment tax, okay? That's another tip. And a new business starting, don't start in January, start them in November 2024. So you don't end up paying tax, you don't end up filing tax returns right away, even though you set up a company in November. Man, I'm going to file taxes in a couple months because, my business is from January to December. So why aren't you thinking outside the box? See whether your business is seasonal business, whether you can do it from November to December, right? Change your fiscal year. And occasional school, professional services. Don't forget, maybe you take some money in, but it's not your money. You haven't even made it yet. So make sure you only pay taxes on the money that you earned, not the money you just took. That's your borrowed money. That's your liability. So those are the key points to plan, right? On the depreciation fund, you have Section 179. And you know what I mean by that because this Section 179 can help you to write off your equipment and so you can write them off like expense. Bonus depreciation, we still have it. 2024 is 60%. So depreciation, cost segregation, depreciation, bonus depreciation are just buzzword for you to say that to your tax preparer, so it's ring a bell for them. They will be like, oh yes, I'm going to look into that for you. All right? So that's another one. And for service company like law firm and consulting, that 20% QBI deduction can disappear. All right? So who knows whether it's going to stay or not? Not just because of the presidential election, and also the, on candidate Trump's side, he didn't even have a specific plan, so I can't say for him. But on Harris' side, and the plan is pretty detailed, but did not address whether QBI will expire or not. So there's a bunch of rules, bunch of Job Act tax incentives are going away. Other than the 21% of corporation tax is not going away. The other one is pretty much changing. So I don't know anything about that yet. Obviously, the president is not really the ultimate person to decide on the tax changes. It's the Congress, right? The Congress are collectively coming from the House and the Senate, and the House are electing the House members, Senate are electing the Senate members. So you will have the majority as we speak after November 5th, right? So hopefully we knew how the political environment is shaped, and we can make a more educated guessing on what the trend would be on the tax law changes. And if we don't have to make a guessing game and they just tell us what happens, then your tax people will be a smart dude and knows what to put into there for you and going with the weather condition, right? The best tax person is not the person had the crystal ball to influence the presidents or Congress. It is the person that understands how to weather the storms. and how to help you with flexibility, with strategy that works for you, and particularly for your situation. So that best people, the best firm, is not that far from you. It is Community CPA. It is actually Ying standing right here for you and with you. And I don't know why you are not coming to our firm. Obviously, there's a lot of people are already here, so we're probably 12,000 clients firm, right? But it is always such a thrill to be able to help people and making their lives so different. So that's what we do. And the real property depreciation analysis is another one, and this is related to the Section 179 and the bonus depreciation. So those are good ideas. Let me quickly talk to you about the process at Community CPA and how we do the tax planning. So the period is in the fourth quarter of 2024. So what do you need to do? What do you need to do so we can begin the planning process? We need your 2023 tax filing copies, and we need you to give us your 2024 estimate. If you have a business, we need to know your third quarter and financial statement, and list out significant event that's going to happen for fourth quarter. Maybe someone going to get married, and maybe you have a big property that you are looking on purchase. So things like that, right? And make appointment with our staff here. Just call in to our front desk and tell them that you want to do 2024 tax planning and how many entity you have. Then they will give you a rough estimate, and then they will give you a time. And if you're planning and needed heavy lifting, and I'm there for you. So we do, our tax team here, pretty sophisticated and educated and dedicated. That is really key. You can have someone with all the knowledge they have, but if they're not dedicated, tomorrow is holiday, yesterday was a holiday too, then just no time to do your taxes. What's the point, right? We are workaholics, so you can count on us working. And we will assign a tax accountant for your account. So the appointment normally is done by a partner and a tax accountant. So that is how we typically take care of you. All right, you can also, for something quick, like you don't know how cost segregation works, and you don't know how mark-to-market works, and you had one question on your tax return, you feel like it was not done right, and you can always come to our website and log into our website and make an appointment with me, Dr. Hao, and Dan Song Kwan. That's how you say her name, Kwan. Kwan in Thailand means precious gift. So, but it's not gift, it's Kwan. And then you have Derek. So you have all these partners that you can book appointment and look at what their specialty is so that you know who would be the best to help you out. All right? All right, folks. 30 minutes already over, and I want to give the time back to you. And I'm so glad you're with me today. And I hope last minute works. If you are a procrastinator, and you are a procrastinator, and we do deal with procrastinators very well here in our firm. But if I can encourage you to change the color a little bit, making yourself not a procrastinator, and to be a planner, and then join us for tax planning service. All right? And our office is 6 days a week opening, and you have our email, Catherine@communitycpa.com. If you are totally not computer literate, just don't even want to have anything to do with the computer, and you know how to email, do you? You can email Catherine@communitycpa.com, tell her what you want, and we'll take care of you from there. All right, I'll see you again. Bye-bye.